cover both of these, and among these, which one you think Soumitra should look at for the longer term?
We had subscribed for the IPO on both, in fact, Burger King as well as Devyani International. And if I was in his place, I would possibly put my money equally 50-50 into both of them, because the outlook for growth in terms of earnings looks extremely strong. And if you only have to go by the verbatim that was shared by the respective management just before the IPO, I think if the new normal that has set in, and if the third wave supposedly does not play a tantrum, then I think recovery should come in sooner rather than later. So I would advise him to put 50-50 in both.
All right. This next one is coming from Padma, and she's saying she has 100 shares of Tyre that she's purchased at 1200 rupees per share. She's saying, should I hold or do a sectoral shift to Tata Motors or KPR Mills, diverse stocks, Kunal, from Tyre to Tata Motors or even KPR Mills, to think of what should Padma do with her holding right now? Shift to Tata Motors or KPR, or you think doesn't make sense to even stay put with Tyre?
I think ideally you should stay put with Thyrocare. Yes, the stock has gone through a cold kind of a correction in the last 4-5 months, from 1450 towards 1120, where the stock corrected towards. But I believe that it's a stock which has done exceptionally well in a longish term kind of a time frame, and there will be patches of correction, consolidation for these stocks time and again. So I think the major part of the correction seems to be getting over for Thyrocare, and it makes sense to hold on to the stock and not give it up at a time when the stock is just about getting into a reversal mode, where you might see a possibility of at least another 20% upside over the near term. Now, Tata Motors and all of these stocks are, as I said earlier, that they're high on momentum as of now, and which is why it's obvious that traders would want to shift focus into these names. But I believe that a much better strategy would be to try and use corrections, use dips which come along the way as a better opportunity to try and buy and average stocks like Tata Motors. So would suggest a hold on Thyrocare as of now, and maybe a buy and dip strategy for Tata Motors.
Okay, we've got a question coming in from Sudha on WhatsApp, and I think she may have missed the conversation we had, gentlemen, earlier on the show where we spoke about auto. Gaurang, would you like to reiterate what your view is, which counters you're positive on the medium term front?
Yes, I'll surely do that. So, for the benefit of your viewers, I'll just repeat. So, overall, as a brokerage house, we are positive on auto and auto ancillary both. And it is very important to have a positive approach towards both, because what auto ancillary does, the reflection of that falls into auto ancillary, and that is your OEM segment companies, tire manufacturing companies, battery manufacturing companies. Various hurdles seems to have been overcome, and not to forget, Alex, there are a lot of them over the last 2 to 3 years since the migration became from BS4 to BS6. Post that, there are other issues, and now you have a new avatar in terms of the electric vehicle that are getting implemented across various segments in terms of 4-wheeler, 2-wheeler, heavy commercial vehicles, 3-wheelers, etc. So we as a brokerage house remain extremely positive. The only thing that one has to look into as far as fundamental goes is the rising cost pressure, and this is something that needs to be looked upon very carefully. And at the same time, how does each and every company manage the operating efficiencies? Not to forget, Alex, I think there is huge investment from the tire companies as far as capex is concerned. There is also a new guidelines that is likely to come out in terms of the safety of the vehicles and the crash tests that are undertaken. So that will eventually, increase the cost of the end product, which you and I as a consumer might have to pay. But it is always to pay a higher price for a safe and a strong vehicle rather than something that will crumple upon crash. So we remain positive. The only thing is one has to look into the operating efficiencies to overcome the cost pressures.
All right, that's the view coming in from Gaurang on auto as well as auto ancillary space in depth. This one, next query is coming in from Maleshwar and wants to know whether it can buy Jubilant Food and Relaxo Footwear at current market price for the shorter term. Kunal, either Jubilant Foodworks or Relaxo Footwear, which one do you think that Maleshwar should look at buying in current market price for the short term?
Yeah, I think Jubilant Food could actually turn out to be a better play because the stock has a tendency of participating whenever the markets get to a recovery phase. Jubilant Food has seen a major part of correction as well, which came by I think in the month of October from 4,550, 600 towards 36, 3,700, 3,750, where the stock bottomed out just about a couple of weeks back. So I sense that the major part of the correction is over. The stock has a tendency of a higher correlation when the Nifty gets into a recovery mode. So I think in that sense, the risk reward is favorable to enter Jubilant Food at current levels. And I think from a short term play, you could look at a possibility of 4,200 to 50 as a potential target for Jubilant Food, and stop loss for that. You can keep it closer to the previous swing lows with the stock made.
Okay, coming back to you, Kunal, on JK Tyre, it's currently trading around 139 or thereabouts. We've got a question coming in from Rajan from Bengaluru. He's got 200 shares at levels of 140, so not too far away from the current market price. What should he do? Should he hold on?
What had happened for JK Tyre specifically was a big turnaround month, which was seen, I think, at Jan 2021, which is a huge month for JK Tyres. The stock jumped up from 75 levels to almost 145, 150 in that single month. And from there, the texture of the stock had changed completely. Now, whenever stocks have such strong, big, huge candles, which moves across, on a single month, it tends to change and have a ripple effect for at least, a couple of years. So keeping that 140 as a base approximately, I believe JK Tyre should be bottom to, because that level could be a good demand zone or a support zone for the stock for months to come by. So keeping that as a support point for JK Tyres, I would suggest a hold and look out for targets of approximately 185 to 200 over the next 6 months to 12 months.
All right, this one is also for you, Kunal, and this one is coming from Chaitanya. He's saying, I thought of buying KPIT Tech after breakout and retracement, but it broke out and the stock is flying and is not looking back. So what is a good level to enter? Please suggest. KPIT Tech. Definitely, Chaitanya was hoping that after the breakout there could be some mild dip or correction in this particular counter for him to enter, and that's clearly hasn't happened. So what should he do, and what sort of a level should he look at KPIT Tech?
And this is typically what happens, that when stocks get into a rally mode, we always expect that when stocks would get into a corrective phase, that's the best time we buy. And when it gets into a corrective phase, that's the best time we tend to avoid the stocks, expecting that those short-term corrections would probably result into reversals, and stocks, they just go up higher and higher. So is the case with KPIT. Remember the stock breaking out of the 375, 380 barrier, which was the previous resistance, and then the stock is almost at 100 points plus 100 rupees higher from those levels. Now, I think at current levels, even though the stock is into a very strong and a very thick of momentum, but the risk reward is not in play. Now, whenever you try and buy stocks or enter into momentum stocks, you always have to understand that risk reward has to be in your favor, at least with 1:2 as a moderate kind of a risk reward. Now, at current levels of 480, 483, you could probably be looking at a target of maybe a 520, 525. But for that, your stop losses could be kept at closer to 440, 445. So that's almost 1:1 or slightly lower than that as a stop loss in a target range. So would suggest an avoid on KPIT at current levels because of the skewed risk reward the stock is showing at this point of time.
Okay, Gaurang, I'm coming to you on this next one. We've got a question on a counter called Methan Alloys. Do you have a view? We've got Homi, who's holding on at levels of 1150 and wondering whether to hold on.
This is out of the universe, Alex. I'm sorry, I can't comment on this one.
Okay, no problem. I'm going to come back to you then on another question, and this one is on Tata Power. We've got a question coming in, and I do not know what your name is. I would suggest that you should put your name. The question is, what should you do for Tata Power? Should you hold or book partial profit? It's currently giving a return of 110%. And Gaurang, this really is the question of the day, I think, because do you take some money off the table if it's hit your targets?
I think it's only prudent to do that, Alex, because in desire and want and hunger for getting more and more profits, what happens is you lose out on what you're making whenever the investment takes the turn or the market starts correcting downwards. And fundamentally, I think one of the thumb rule that you follow is that whenever you have the expected returns coming through, at least you should book partial profits and bring home some part of your capital, or if your investment has more than doubled, then bring home your entire investment, a little bit of profit, and then stay invested in the rest. Tata Power, we have a fundamental buy call on it, and I think the stock has moved into a total different trajectory, blue sky trajectory, if you will, and with the business strategies that they have, especially with the renewable and solar energy, I think they are going to grow multifolds. But given the level of investment and the current market price, given the fact that you're making more than 100% profit, well, at least bring home your capital and a little bit of profit, maybe 15-20%, sell that much quantity of shares and stay invested in the rest.
All right. This one is coming from Ram from Chennai, and he's saying he's bought HUL above 40 shares at 2600 rupees per share levels for the longer term. But he's saying that he is losing patience and he wants to know if there's any chance of a bounce back in the near future. Kunal, I'll take this one for you, given that he wants to know how the chart's looking for HUL in the near term. Are you envisaging any bounce back for HUL? Because clearly Ram has invested at the levels of 2600 rupees per share and he is actually losing patience.
So I think, first of all, you invest in a quality stock, large cap name like HUL, and you should try and control your emotions and sentiments over here, because losing patience in a quality name could actually turn to be very detrimental to your portfolio and to your trading as such. Now, for a stock like HUL, the reason why I believe that the stock is lagging a bit behind is because of the recent sell-off the stock has seen, mid of October from those levels of, I think, 2,700 or 750. The stock has gone through a selling pressure. Now, such kind of selling pressures, they take a lot of time for stocks to be absorbed. Now, typically I've seen that these kind of selling pressures have an impact of at least 2 to 3 months for stock prices. So for the next couple of months, maybe because 1 month has passed out for HUL since that selling off, maybe another couple of months, you could probably see the stock getting into a drag mode. But then, eventually you will see these stocks participating and recovering whenever the markets also get into a recovery or a rally mode. So I believe HUL, quality stock, you should stay for a longer term perspective. And I believe if you have, wherewithal to try and average it out further, then use corrections at least to the tune of maybe a 5% correction further from current levels as a good opportunity to average further.
Gentlemen, we have about 5 minutes left in the query segment, so request you to keep your answers as short as possible, but of course as cogent as possible. I'm coming back to you, Kunal, on Ashoka Buildcon. 100 shares bought at 118. The current market price is 105 or thereabouts. The question from Saurav, who says he's a new investor, is how can he add more, and what is the time frame that he can keep for this?
Yes, you can look to add more. I think the recent low the stock made of 98, 99 or 100 odd levels, I think that's a very durable and a strong support for Ashoka Buildcon. So keep that as a stop loss and expect the stock to bounce back towards at least 112, 115 range over the near term.
This one also is for you, Kunal, and this one is actually coming in from Dikshita. Wants to know, can GAIL be added at current market price? Does it make sense to go ahead and add GAIL to portfolio at current market price?
Well, I would suggest an avoid at current levels, because it's not that the stock is not available cheap. It's available cheap. It's available at a good support point for itself. But the stock is lacking momentum. When we've seen that in the markets right now, that the PSU stocks, likes of ONGC, GAIL, Coal India, etc., these are the ones which are still taking a bit of selling pressure for themselves. So I think in that regards, maybe the pain is not over for these PSU stocks, and you might see these stocks dragging a bit more lower. Or going into a time correction as well for the next couple of months at least. So time-wise may not be a perfect time to try and enter into GAIL at current levels.
Gaurang, this one's for you. Delta Corp, it's had a pretty good run over the last 3 months or so. Specifically, we've got a viewer who bought at levels of 219. Stock is currently at 302. Again, she's asking she can hold for the long term, but should she take some money off the table?
Well, no official coverage, Alex, on this one, so I won't be commenting on buy, sell, and all. But let me say this: I think it is one of the great unlocking theme, and there are no peer comparison as far as my understanding goes in the listed universe for Delta Corp. Unfortunately, don't have a coverage.
All right, this one is coming from Kaushik and he's saying, is EPL the right investing choice at current price? What's your take, Kunal? Do you think it is the right choice at current market price, EPL?
Apologies, Cheryl, don't track the stocks. We won't be able to offer any comment.
All right, no problem. Then I'll get your view on this one. This one is from Vignan and he wants to know about Reliance Power. He's actually purchased 100 shares at 14.25 rupees per share. What should he do? Does it make sense to stay put with Reliance Power? No doubt we saw in between some steam picking up in those Reliance ADAG group stocks. But what should Vignan do? Makes sense to even stay put with this holding?
Well, I would suggest an avoid, and if you've already purchased, I would suggest look to hibernate back towards quality names. I think a much better alternative for this could be either Tata Power at current levels, or on some decent corrections if the stocks happen to see over the near term, or you can look at even names like Power Grid or Torrent Power. In that sense, I would suggest a switch from Reliance Power to such other quality names.
Gaurang, a view on Exide. This is being sought by Vipul. He's gotten at levels of 186.5, making a bit of a loss. Should he hold on or switch to something else?
I verbatim when it came to the outlook for auto ancillary, and I did mention that battery manufacturing companies are also something that you should keep your eyes on. And with this revolution from ICE engines to electric vehicles, I think battery manufacturing companies will definitely have a larger role to play. And both, in fact, Exide Industries and Amara Raja Batteries are going through their respective capex. So have patience and stay invested for long term.
All right, with that we'll actually kickstart with the rapid fire segment, and the first one I will take to you only, Gaurang, and this one is from KJ Singh, and he wants a long-term view on Tide Water Oil. He's bought it at 2,800 rupees per share. Does it make sense for him to stay put with this one?
Well, honestly speaking, this is the least traded counter in terms of volumes. And I don't think fundamentally there is any coverage within the universe of equity market. Can't comment honestly. Sure.
Gaurang, do you have a view that you can share on Policy Bazaar? We've got a viewer, Lakshman, who says that he can buy now for at least a couple of years. Should he do so?
Well, no coverage here again. I'm sorry, Alex.
No problem. We'll take another question.
Okay, this one is for you, Kunal. Then Sudha is asking, should I buy ITC?
Okay, so on ITC, I think yes, it's a classical stock. The stock, getting back into the thick of rally yet again. So I think at current levels of 230 odd, seems to be a good buying zone for ITC.
Okay, Gaurang, Punjab National Bank bought at levels of 45.8 and then at 41. Should they hold on? Kiran is asking.
Yeah, so we have a coverage over here, but with a disclosure that we are recommending this stock PNB to high risk, high return trade kind of investors, given the volatility in terms of numbers, earnings, etc. If you have that, continue to hold on.
All right. This one is from Ajay and he's saying, how much more time do you see NCC in consolidation phase? I have 500 shares that was bought at 90 rupees per share. Have a 3 to 6 months view. What's your take on this one, Kunal? NCC, how long do you think it will consolidate?
Well, I think sooner than later the stock should see a breakout, because I think the last month's move for NCC from 70 to 80 seems to be very fast and a zipping move for the stock, and that should have an effect on the stock price over the very near to medium term. So I think over the next maybe couple of weeks or maybe over a month, you should see the stock moving up higher to levels of 85-90.
One last question then. Apollo Tyres at the current level, the time frame is 1 year. Should you buy at this juncture? Kunal, Asha is asking.
Well, yes, you can look to buy at current levels. Keep a stop loss if you're looking at that kind of a time frame, closer to 220, 215 for Apollo Tyres. and a target range on the upside closer to 270 to 75.
And all right, with that we come to the end of the queries segment as well as the rapid fire. Thank you so much Kunal as well as Gaurang for joining us on the show, giving us your take in depth on the auto pack as well as resolving viewer queries. And on that note, we'll slip into a break on this edition of Buy Now Sell Now. But stay tuned, there's lots more lined up for you on the other side of the break, so don't go anywhere.